Good morning, everyone. Thank you for joining today to our online webinar regarding the insurance crisis in Florida and how to some ways to get some insurance tips and better pricing, both for yourself if you're investors or for your clients. I'm excited to have Jerry Katz here this morning, who's my friend and colleague. Jerry is the owner of Premier Protection Insurance Services. I met Jerry a few months back, and well, actually, our paths have crossed a couple times through mutual clients and friends, and people referred me on to Jerry, and I really never took their advice. But a few months ago, I moved my whole portfolio of properties and their insurance services over to Jerry's team, and they're doing a great job and found me a lot of savings. Along the way, Jerry really gave a great explanation for what's happening in the insurance industry here in Florida, why prices of insurance have been skyrocketing in the last year or so. And I really thought it was some great value. So I wanted to have this webinar for those folks who are clients of the firm, who are either realtors or brokers or investors or property managers. This content today that Jerry's going to present is going to be really helpful for everyone. So thank you again, Jerry, for joining. Good morning.
Good morning. Thanks, Jay. Appreciate it.
Sure. So just a couple things about the format here. Jerry's going to do most of the speaking since this is his content and his webinar. The content will last somewhere about an hour of time. That's what we have planned. You could go ahead during the hour. You can type questions that you might have into the Q&A there that should be on your toolbar for Zoom. You can type those in. Periodically, I'll be looking at those since I'm hosting and Jerry's going to be doing most of the talking. If I see some questions along the way that I think Jerry might need to answer based on where he's at in the content, I may interrupt Jerry a couple times with some questions. But for the most part, we want to make it through the content here. And then at the end, Jerry and I will remain online for at least another 10 minutes or so to answer questions that we didn't get to during the content of the presentation. And Jerry is happy to answer those questions for you. If we can't get to any further questions, we're going to share Jerry's content or his contact information with you, so you can reach out to him separately, and he and his team will be glad to answer questions that you might have regarding your insurance needs or your client's insurance needs. So without further ado, let me hand it off to you, Jerry. Again, welcome, and we're so glad to have you.
Thank you, Jay. Appreciate it. Jaron, curious, is there a way for me to see the attendance or no? It's just us. We can see each other, correct?
Well, they're seeing us right now.
Okay.
So no, unfortunately,
okay,
but one of the things that we do here is that we don't allow people to audibly speak. We've done that before in the past, and what happens is a lot of people leave their microphones on, and it's very distracting. So the good news is that people can type their questions into the Q&A, and I'll periodically be stopping you, Jerry, to ask some of those questions. So, okay.
Okay. Awesome. Okay. Thank you, Jaron.
Sure.
And so welcome everybody. Obviously we got a lot of attendance over 50, and obviously we have an insurance crisis in South Florida. And the good news is I think I'm in the third cycle that I've seen since I've been in Florida for 23 years. So I'll move to our first little slide here. And just to give you a little bit about the content, and I'll give you a little background about myself, but this is what you can expect today. Understanding the insurance crisis. I'm going to talk about commercial real estate and residential real estate and what's happening and, how it's affecting deal flow and closings and lending. I'm also going to give you insights into how insurance works and why there's what I call a double knockout on this cycle with insurance and interest rates. And I'm also going to explain what other agents do in these types of crises and things like that. So I'll identify challenges, solutions, and a couple other approaches and so on. But I'll start with a little background on me. I've been down here, I moved down December 25th, 1999. And ex-Wall Street guy. I was there for about 8-9 years, everything from Raymond James Financial, which is Florida-based, to Goldman Sachs, to Lehman. So what I really learned about is cycles, right? Everything's cyclical. Gravity says what comes up comes down, and vice versa. So that was my biggest takeaway from Wall Street. And I ended up moving down to Florida December 25th, 1999, because before I was age 30, I made a few $1,000,000 in stocks and cycles. And then I was caught up in what I call the tech bubble. And I lost it all in about 6 weeks when AOL went from 110 to 0. I had a margin call, but I had a condo in Manhattan with some equity, and I started over. And I had a mentor who had been my biggest client on Wall Street, showed me how to buy multifamily and income property and passive income, commercial, industrial, mostly in Harlem. He had taught me because we rode Harleys together back then. So I decided to move to Florida after losing it all, because I saw the demographics of Florida, and I knew we would probably have a 20 to 30-year run because of people migration and the weather, the government regulation. So I decided to move to Florida and start my real estate career. So at one point I owned Investors Realty, Greater Broward Realty, Old Florida Mortgage. So all across the board. And then, but my main niche was owning and operating real estate and churning around and value add. And I noticed my insurance expenses every single month, right? With cutting into my ROI or my return. And we would track things and we would see they were constantly increasing, especially in Florida. So about 4 years in, I took my insurance agent and I said, let's open a shop. And we did. And 21 years later, Premier Protection exists. I still have a multifamily portfolio. Today, it's about only 144 units. I actually exited in 2007 the large portion of my real estate portfolio. I had a large exit and I sold to my partners, Investors Realty, Greater Broward Mortgage, got out of all those, and I stayed in insurance. Why? Because I love recurring revenue. And one takeaway is I will never be in a business myself that I'm not going to build an asset, right, that I could sell one day. So insurance agencies are recurring revenue, apartment buildings, commercial real estate. Why? Because I lost when I was in a sales world, paying a lot of taxes, high income. I'm only as good as my last sale. So that's what finds me in this world, and so on. So I tend to think like a property owner and an entrepreneur. You can read my bio, but I'm also the ex-president of Entrepreneurs Organization South Florida. It's a nonprofit that engages leading entrepreneurs to learn and grow from each other in a non-solicit fashion. 52 countries. We share the same core values, and it's a group of mentors, peers. You got to have at least 2.5 million in revenue and at least 2 companies to be in, and you have to meet our core values. So I tend to think as a real estate entrepreneur more than an insurance agent. So that's my background. And so I've seen these cycles several times, right? Everything is a cycle. So understanding the insurance crisis and what's going on. So when the storms rolled through in September of last year, just like they did 7-8 years ago before, we saw what happened, right? And, here you can see in the slide, about 16 property and casualty companies went out, homeowners companies, commercial companies, and it just got worse. After storms that hit Fort Myers last year, then a double whammy on the East Coast in the Daytona area, that was it. So Florida's insurance is what we call E&S carriers, excess and surplus lines. The opposite of that is an admitted carrier, right? Admitted is what you see in the Northeast, Boston, New York, those places. An admitted carrier is approved by the state, and the financials are approved by the state, and they have set pricing on an annual basis, and you don't pay sales tax on those. So when you get a quote, whether it's a homeowner's policy or commercial policy, when you don't see sales tax, you're with an admitted carrier. In the excess and surplus markets, which is 90% of Florida's markets, they have a rating system, right? And it's called AM Best, just like S&P. And we only sell A- or better, my E&O insurance. But the reason I'm saying this is Florida, after every cycle comes, all these carriers go broke because we have about 20 to 25 carriers that are E&S carriers, right? And then we only have 1 or 2 admitted carriers that are state approved and verified financials. And the rest is Citizens, the state pool. That is, our place of last resort, but not always, right? Because Sorry about the camera. Every once in a while, my Microsoft camera conflicts with Zoom. So my point being is that there's a demo tech system. The 15 to 20 carriers that are ENS carriers in Florida created their own rating system because they don't have enough capital to withstand the losses. They can write $20 billion in houses, but they're only sitting on $100 million in capital and reinsurance. That's why these companies fold all the time. So just as a little side tip, I love when clients call me and they say, hey, your insurance with Lloyd's of London was $18,000 on my house. We just got this company called Tip Tap or Slide, right? They came into Florida and it's only 6,000. Well, good luck, right? Because the financials are not there. So, and generally speaking, what they do is to enter the market, they'll sell you a $6,000 policy. 12 months later, they realize they're not profitable. They don't have enough reserves based on claims, and then jack the price up twice. So just a little warning to watch out for. But that's what's going on. And since the storms, I'd say 75% of the carriers on any piece of property that's pre-2000 construction in the state of Florida, they're either sending non-renewals, there is no more market, or the capacity is so limited that the price is skyrocketing. So that's what's going on, and I'll get into the details of why. Okay. So to give you a couple examples, why are insurance companies leaving Florida? Why do we have a crisis? So let's start by Florida has some of the biggest fraud rates in the country, unfortunately, right? So I'll give you one example. When Hurricane Ian came through, I'm a big writer of universal insurance. Some of you may already have it, right? And we write over $1 million in premium one. We're a gold standard. Universal is an admitted carrier that's been around 12 years. A friend of mine actually took it public, and Brad, and they are admitted. They are one of the carriers that are still standing and admitted. They are shut down in Tri-County, no new business. They are shut down in the Tampa area, no new business. They are shut down in the Orlando area, no new business. And now they're shutting down Jacksonville, city centers, right? They're still good in the remote areas. Why? For an example, when Hurricane Ian hit Naples and Fort Myers, right? I got a call from our account manager at Universal. She checks in with me every quarter just to see how we're doing at loss runs. She says, Jerry, we have 650 public adjuster claims in Dade County from Hurricane Ian that hit Fort Myers. I go, what? 650 public adjuster claims. Last time I checked, it hit Fort Myers and Naples, right? Well, the insurance, which is a contract, that's all it is, right? Says if you have a named store within 250 miles of your location, you have the right to make a claim. 650 claims in Dade County in a storm didn't even hit Dade County, but in the contract it's 250 miles away. So what happens is listen, public adjusters, I don't want to give them a bad name because I have great ones that I refer to when you need them. Because if you have a real claim, and that's why I say I think like a property owner or I think like Duran, they don't want to pay, right? It's contract law. And if you have a massive claim that's legitimate, just as insurance carriers have in-house attorneys, and they'll find a way to try to not to pay the full amount. And it's just the way it is. It's an ugly thing in the industry. So that's why public adjusters exist. But on the other side, you have 650 claims in Florida in Dade County, right? And why? Because you get a knock on your door and, Betsy Smith answers the door and they say, hi, here's your $100 American Express gift card. We see you have roof damage, right? And then they sign what they call a waiver of subrogation or a third-party litigation form, which gives them the right to make a claim to the insurance, and they take over. That's what happens. And they see 4 cracked tiles, and then they go in for new roofs, this, that. So we have massive, what we call public adjuster claims and things of that nature. Our government, DeSantis, has done a lot of insurance reform. A lot of things that he does are gray, and a lot of people complain and a lot of people love it. But the most recent thing to fight this, right, is a law that was put in December 15th with attorneys and public adjusters. Before, they used to be able to make a claim. Let's say the claim was $100,000. An attorney could bill them $200,000 in legal expenses. And most of those come from these public adjuster claims. right? It's this whole industry of that. How do we extort the most we can from insurance companies? And they do that. So $100,000 claim, $200,000 attorney fee. But now it's a percentage. So he changed the law. So if you get paid 100,000, the attorneys can only get paid a percentage. He's just trying to restrict, insurance companies getting hit, so they're more likely to pay out versus because they're afraid of claims because of, what's happening in the industry. So I'll do that. So the next thing is the property agents, right? After Hurricane Andrew came through in the 90s, all codes changed, right? Before, houses were built not to withstand category 3, 4, or 5 hurricanes. After Andrew, all the codes changed. So really year 2000, 1999 is the big number. So the age of all these properties that we have, Fort Lauderdale, Palm Beach County, and everything, 70s, 60s, 80s, 90s, even though they're renovated, even though they have new roofs, they are not built to new hurricane codes. And those are the ones that suffer the biggest claims, right? Then you have the storms, obviously, and then no capacity in today's market. So I'll move forward a little bit to start getting into the details. So this is important to understand. How does insurance work, right? And then, and insurance works really with institutional investment, right? So what happens is let's say I want my own program. We have our own insurance programs. We do 75% commercial real estate and 25% residential on the insurance side. So if I have property owners all over the state, which we do, I have to cover, let's say, $1 billion in replacement cost value, right? Remember, if there's a lot of mortgage people out there, bankers and things like that, when you get your client to get a loan, and then, whether it's commercial or residential, the bank says, okay, I'm buying a property, a 10,000 square foot building for $4 million. That's $400 a foot, right? And the loan on that is, let's say, $7.5 million with 25% down. The bank comes to you and says, we need to insure $7.5 million. No, you don't. We don't insure the value of the dirt. And the reason you're paying $10 million is because of the return on investment. There's a lease in there at $80 a square foot, right? Very typical in Miami and Wynwood. You're buying way above replacement costs. Insurance is based on replacement cost, right? What does it cost to replace that structure, right? Not the dirt value. So another issue is like homeowners that live on the water. They're buying a house for $4 million. It's a 4,000 square foot house. The loan is $3 million. But the house replacement cost value of 4,000 square feet maybe is $300 a foot, 1.2 million, but they want you to insure the loan amount. No, they don't. That's where we get involved. You only want to insure replacement costs. So I just want you to understand what replacement cost value is, right? And then, so if I need to insure $1 billion in replacement cost value, and I want a program, so I have a sales force that can put out, this program. It works like real estate syndication. Let's say on $1 billion in replacement cost value in Florida, I need a wind program. And the cost of that is $100 million in premium to cover $1 billion in property values, right? Replacement cost values. The first thing I do to start that program is I need to go to Lloyd's of London, which reinsures 95% of the market, including Citizens of Florida, including Geico. Well, that's a little Berkshire Hathaway, but still, they're the second biggest reinsurer, Warren Buffett. So the first thing I need to do is approach Lloyd's and say, okay, it's $100 million. And then I need to buy reinsurance, which covers 95% of the losses, okay? So they say, how much is reinsurance? It's 60 million on the 100 million. Think of a real estate syndicate, okay? So I go, okay, great. I need to secure the 60 million in reinsurance. Then my retail force goes out and sells 100 million in premium over the course of the year to cover the billion. Out of that 100 million, 60 million is reinsurance, 18% is commission between wholesalers and retailers, and then you have about 5% admin. Let's call it on the back end for simple numbers, a 20% margin. If there is no storm, that 20% is profit for that syndicate. And how do I get to 600 million or $60 million? I approach institutions. I have to go to Goldman Sachs, Fireman's Fund, Teachers Credit Union, and say, give me $60 million. Here's what it looks like. At the end of the year, we project an 18 to 22% profit if there's no windstorm. If there is an event, you're whole anyways. You get your principal back because reinsurance kicks in to pay for the majority of the claims. Only smaller claims you take care of, and so on. So that's how it works. So if you have a $2 million profit, the syndicate gets 60%, and me, the syndicator, gets the rest, right? Just like a real estate syndicate. So I want you to understand that's how it works. And this is all about this. This is how they invest. Okay. So this is important to stand. Where's my little knockout punches on my PowerPoint? Okay, didn't save. So why am I explaining this to you? Why? Because we had a double knockout last year. There should be a storm here and then there it is. Sorry about that. A double knockout for insurance in this cycle, right? Because interest rates, what happened since in the last 6 months? Interest rates went up 500 basis points, which is 5%, right? And now what does that mean? T-bills, which are government bonds, the 3-month T-bills trading over 5%, right? So last year when the storms came through and these institutions that were investing in these pools alongside of us, right? They didn't make any money, zero. In fact, they got their principals back, but they may have lost a little bit based on admin and small payouts. So for the last 7, 8 years, when we had a low interest rate environment, it was, a quarter point from the Fed at one point, right? The Fed funds rate, we were dropping. Where do institutions beat inflation, right? Because that's what money needs to work for you, right? For institutions, for us, for all of us. We don't work for money, money works for us. That's my favorite saying. As long as I'm beating inflation, my money is growing. If not, you're sitting on cash in the bank, you're losing money. So institutions flock to places that they can, make 5%, 6%, 8%, 9% over the cost of inflation. And they were making a killing in insurance pools. So if you go back 6, 7 years, there was capacity. If institutions are looking for return, where do they go? Insurance pools in a low interest rate environment. Because if there's no storms for 4 or 5 years, they just start making money, 8%, 12%, 14%. And then what happens? Other institutions pile in, which creates more supply in the market and a drop in insurance prices. They don't need to make 20% now. We need to put out insurance as much as possible. How do we do that? Lower the price. And the investors and institutions will take a lower amount of money. So that's what happens. So what happened? The storms came in, all the pools got destroyed. The investors didn't make any money. They get a bad taste in your mouth. And this happens every time storms come through. Then they back off for a couple of years until they need returns again. But this time, double whammy. Interest rates are through the roof. So where are the institutions that got hammered last year? They're in bonds at 5%, 5.25%. Inflation's coming down. Fed's raising interest rates, and they got a bad taste in their mouth. So every reinsurance pool resets every quarter, right? In January, it was 20% of the institutions involved in these syndicates at the same time last year. You lost 80% of the market overnight. Now, how do you get them back when they're all in bonds at 5% and waiting for an oncoming recession? I'll tell you how to get them back. Triple the price of insurance. That's how. Because if you triple the price of insurance, now I can show you, hey, I'm not shooting for an 8% return. I'm shooting for a 15, 18, and certain institutions will come in. So when will this subside, right? Watch interest rates, right? And if we get storms this year, again, with interest rates at these levels, we'll have less capacity next year, right? So watch the storm season. But typically what happens is we have a bad storm season, then we're good for 36 months. I personally predict that interest rates, England today went 0.5 point, surprisingly, because they still have high inflation. But our CPI dropped to 4%. The Fed paused, but we still may have a 0.5 point up. I think we're at the top of the cycle. But again, I don't have a crystal ball, but now we got to wait for the pullback. And we're heading into an election year, right? So by the way, real estate tip, I think we're at the peak of the pessimism right now. And I'm going to get into that. So that's what's going on with that. So now how does this affect people?
So
right?
Jerry, just a quick summary of, again, you don't have a crystal ball, neither do I, neither does anyone. But if we have a quiet storm season, your prediction, and let's say rates stayed relatively stable, they don't go up very much, maybe a 0.25 point, maybe a 0.5 point over the next 6 months, would you guess that we would start to see money flowing back into the system and prices stabilizing, especially with the new legislation that came out, less litigation. Is that
Right.
a general prediction you have?
Correct. Because there's a lot of liquidity in the marketplace. There is so much liquidity, it's crazy. And obviously we know where that came from, right? Over the last 36 months, the COVID, right? All the government stimuluses. So yes, eventually, right now they're in bonds, safety, because there's too much. Whenever there's uncertainty, institutions runs to bonds, right? They have to preserve capital. But eventually, if we have a quiet storm, they forget what happened very
Right.
quickly and start
Short
looking for
memories.
returns. Right.
Okay.
So
So
agreed.
maybe September, October, we start to see money flowing back in. They wait out the storm season possibly, and yeah,
Correct. I would say January.
got it.
That would, yeah, because of when reinsurance rates every quarter. Storm season is June 1 through November 30th.
That's right, through November. Okay, so January 1, May 2024, essentially. Okay, thank you. Moving on.
Right. And by the way, we're not the only ones in crisis like this, right? Meaning California
too. Yeah.
Yep. California has had this with earthquakes for decades, right? And they haven't seen an earthquake in how long? And the only one who insures for earthquakes is the state government. All right. This is what government is for. We're going to get that in the presentation.
Sure.
And then now it's the fires, right? My wife watches Selling Sunset. You know, it's that show on Netflix with the beautiful, real estate agents who sell the homes and the two guys and
Sure.
everything. Great show. I like it, sort of. My wife does, but
it's over.
Right. But what's funny is in the last show that I was watching, they're like, last year, this home in the hills sold for $18 million. The problem is the fire insurance last year was $22,000. This year it's $210,000. So the price reduction is now $16 million on the home. So I'm hearing it on Netflix, right? In the state of California. And it's also happening in all coastal states, by the way, Texas, Carolinas, Georgia, things of that nature. The capacity, they're running away. Yeah. You want cheap insurance? I'll tell you where you can live. The Midwest.
Move in.
Ohio, right. Colorado actually has a low catastrophe rate. That's why you have a lot of IT companies, the Mile High City in Denver, not in the mountains, right? Those fire hazards, right? So let's go back to how is this affecting? So I put out, since I own commercial real estate, right? This is a crisis for me, right? And I saw it coming because I've seen the cycles. So after the storms, I started putting out my first videos to our strategic partners like Kelly Grant, Marcus and Millichap, CBRE, the banks, all of them. People buy real estate for passive income. And again, just like institutions, we want our money working for us, right? And appreciation. So the typical real estate investor, if I'm buying let's say, $10 million property, my down payment is $2 million for simple numbers, 20% down. And I'm shooting for what? I'm not looking for a 30% return. I'm looking to beat inflation. Our cash on cash returns are between 8 and 11% on real estate, 7%, 6%. In the commercial, what's a 5 cap, right? A negative cap. So on that piece of property that I bought for 10 million, invested 2 million, I was making 10% cash on cash. That's 200,000, and my insurance expenses were 100,000. They just tripled. Remember? Triple. Because that's how I get back capacity to meet the bank requirements that I have to for wind insurance. So what happened to my ROI? Disappeared. You have a crisis, right? And I'm not sure who's on this, but the biggest crisis in non-recourse lending. So if you have a Freddie or Fannie loan, so there's two types of lending, right? There is PG, personal guarantee loans, and then there is non-recourse loans. Non-recourse is dominated by Freddie and Fannie, and you can qualify for a property and the LLC signs, not personal guarantee. The insurance requirements for non-recourse loans are 30 to 35% higher than a personal guarantee, like with a regional bank, smaller banks, credit unions, and things. Why do people go there? The rates are better. And they have interest-only programs, these things like that. But the insurance requirements are full replacement cost value, excess liability, 12 months of business income loss for your property, right? Terrorism, 25% law and ordinance, 30% higher. Why? Because Freddie and Fannie loaning the money, for some reason, if you default, they need the property to stand on its own. And when they sell those loans off, it has to meet all those requirements. So if you're sitting with one of those loans that you locked in at 3.5%, 4% 3 years ago, that's about to adjust, right? The interest rates are going to change because they only have 3 to 5 year locks. Your payments are going to double. But what happens this year when your insurance last year was 100, right? With a 5% wind deductible required by the bank. And all of a sudden it just came in at 300 and the deductibles are 15%. And if it was a $10 million property, they're only willing to offer you 2.5 million on wind because there's no capacity. There's a problem, right? So what's been happening is this is in the servicing world. It's not in the underwriting world. You're already with that loan. So in the underwriting world, you're not getting that loan. There is no way you're going to meet the debt to income ratios. There's these realtors, and you're some of them on the commercial side, are putting out a 5 cap from a listing that's from 6 months ago with a $100,000 insurance expense. Today, that's a $300,000 insurance expense. And it doesn't even have the capacity to meet the bank requirements. So if you're sitting with those loans and your insurance doubled, what are you going to do? Force place coverage from the bank? Well, they're running out of capacity. Double the premiums, not meeting the requirements. My 100% passive income just disappeared, right? Because of interest rates and because of insurance. There is a crisis. And some of my good friends, which Duran shares with me at Marcus and Millichap, they can't close deals. What are they doing? Right? Because they thought a 5 cap was a good sales price, but now with the insurance expenses and the interest rates, it's gone. So that's why I'm saying this is the time. Prices are coming down. Go ahead.
And one other thing to interrupt there, not only are we seeing some deals die because of that, because of the insurance expenses, and of course, increased taxes, year over year with property prices increasing, all of that. But it's also what I'm seeing is the one of the solutions, and you'll get into solutions here shortly, Jerry, but one of the solutions is I'm seeing some creative deals coming around where buyers are getting seller financing. So we'll see, for example, that happens a good amount in the multifamily deals that we're doing. We'll see buyers negotiate for sellers to hold notes for a few years, 36 months or 48 months, so that they have some breathing room. And of course, once they're able to go refinance with a traditional financing and get those insurance prices under control, which it will at some point, it's just, like you said, it's market forces, that seller financing allows them to do that. It's kind of like a bridge. So I've seen that on several deals already, but yeah.
Right. So I'll give you just a couple stories from yesterday, right? Really quick on this scenario, right? One is Joy Trigley and Jonathan Knight. They're one of the top 5, residential realtors on Las Olas, right? Good friends of mine for years. Joy's been in the business 40 years. They sell, anything from a $4 million house to a $20 million house. I'm on their speed dial. Okay. They're touring a house in Harbor Beach that's 4,200 square feet, built in 1971 with 80 feet on the water, total gut renovation. A buyer is coming down from New York and he's a cash buyer. First question he has is, they get me on speaker, can I get insurance? Right? Flood zone. It's gut renovated, new roofs, this, everything like that. But the 1970s, there's no market. So the sad truth is that house may sell for $6 million. It's 4,000 square feet. The replacement cost is 1.2 million, right? And it's got a 1970 year build. Doesn't matter if it's got hurricane, window, impact, doesn't matter. The year built just knocked it out of any potential savings with a good carrier. And by the way, Citizens has a $700,000 max in Broward County, $1 million in Dade and $700,000 in Palm Beach and less up north. So the point is I can get them insurance, right? 3 years ago, I would have told them it was going to be $12,000 to $14,000. Today, I have to go to excess and surplus markets. I can't get them into Citizens. I have to split it. I have to do Lloyd's with the wind at a 15% deductible. The hazard, $10,000 deductible versus $2,500 deductible, and that policy is going to be $30,000 to $32,000. And he doesn't even have a bank, but they're worried. These people are worried. And the flood insurance, FEMA, they changed everything in the last 24 months. We used to use elevation certificates, and that would determine your flood insurance. Not anymore. They figured it out. So max on homeowners for flood was $250,000, commercials $500,000. That's max coverage. And they used to price off the elevation. and that was your coverage. Now they want replacement cost value. So if it's a $1.2 million house replacement cost, and there's 250,000 in coverage, the price is based off the 1.2, even though they don't give the coverage. They come up with ways just to increase, to cover losses from FEMA around the country. And that's what, and the losses that happened in Fort Myers. So flood insurance can also triple. We do have solutions. There's something called the LOMA, Letter of Map Amendment. If you're a commercial investor and you're inland and you don't want flood, I have engineers who can poke holes and get you out of flood, right? And guess what? I don't make commission that way, 22% on flood, because I think like you do. And that's what I do. And that's what I mean, that we're going to get into what the other insurance agents do and so on. So one more example. 2 days ago, I was referred in by a lender out of Tampa institution, Raymond James. Buyer is a 130,000 square foot retail shopping mall built in 1986 in Kissimmee, Florida, right? The anchor is Winn-Dixie. They've been in contract for 4 months. He's hard $350,000, accepted the deal. There's an original roof, 1986, but it looks great. It's in great shape. The roof is $800,000. They have to close on the 30th. Guess what's holding up the deal? Insurance. The replacement cost value is $13 million. His agent at a Fortune 500, USI Brown and Brown type of company, they gave him a quote. Last year it was $110,000, the insurance, including liability, the parking lot, everything, right? They gave him a quote, $13 million the bank is requiring to replacement costs on this. They gave him a quote for $380,000. It only has $5 million of wind insurance, can't even cover the first 13, no capacity. And there's a 15% deductible on the wind off the 13 million, not the 5 million. On the hazard side, this means not wind, right? Fire, lightning, vandalism. They're giving him the $13 million limit with a $50,000 deductible. And it's $300,000. The bank won't accept it. Okay. Those things, they're exposed and the deal is dead. So I'm scrambling. I have 9 days to fix the solution. I spent 45 minutes with the board of the council of the bank, explaining them that I will get them $2.5 million in coverage through the government. On the wind, it'll be a 2% deductible. The business income, I suggest using a line of credit, right? It's 1.2 million in income. Charge your client a point. If the odds of a hurricane hitting Kissimmee and destroying a total loss of a building like that's been there since 1986, that solid concrete roof, hurricane wind, I mean, the chance of a total loss on that is 0.0001, right? So what's the reality of insurance? Partial losses. Windstorm comes through, you have a $100,000 claim, $200,000 claim, $300,000 claim. Well, he's got his first 2.5 million. So the banks, and that's a portfolio lender that I spoke to. It's a credit union in Orlando. Portfolio lender means that they're loaning their own money. They're not borrowing from the federal government and the Fed. They can make their own insurance requirements. Solution, okay? And they want to lend money. Yes, you'll pay a 0.5 point more versus Freddie or Fannie or 3/4, but it doesn't matter. Their insurance requirements are flexible. Long story short is the bank agreed to our solutions. We're landing the whole deal with a $2.5 million in wind, 13 million in hazard, 2% deductible on the wind, no business income. They're charging them $12,000 for a letter of credit for 24 months, not 1 year, cheaper than insurance. And then we're landing the whole deal at $84,000. Guess what? Their agent doesn't care. Their insurance agent, he wanted to make 14% on a $300,000 policy. And if the bank can't take it, sorry, that's what's going on, right? So now I'm going to go into the agent world, right? And I am an agent, right? Licensed agent. But I think, first of all, I believe in what I call the law of the universe. The law of the universe says I breathe out carbon dioxide. That tree gives me oxygen. I, believe that's how you live, create win-wins for everybody. And I embrace, I know Duran's the same, we embrace that, right? We nonprofits, everything, my staff, culture, everything. We believe in giving. And my philosophy is if I go through life focused on a win-win for everybody, I go through life with, wind in my sails and my boat just keeps moving. That's why I have a line to work with us at the insurance agency. So that's how we work. The other
Jerry.
side is, yeah.
Jerry, sorry to interrupt you here, your thought, but I did promise that we'd answer a couple questions along the way. We'll save most of the questions for the end. But if you don't mind, if I could just ask you a couple things here. Marie has a few questions for you. Let me read them very quickly. Probably these are better answered maybe when we get a little farther into the presentation with the solutions, but I think we could probably answer them now. She says, I currently have rental properties in a corporation and I have a liability policy and excess liability for it, but every year it's getting more difficult to renew to the point where I don't know if I'll have a policy again at my renewal in September. Where can I find options? And then next question, she has a follow-up is, right now, is there an alternative to have rental single-family homes and individual DP3 policies with Citizens? I would love to have one master policy for all the properties scheduled into it. And then
Got it.
I'll just start with those, and then there's another follow-up.
Okay. So on the liability side, right? On your rental properties, yeah, you should, and Duran can advise you as well. The best liability, first of all, it's good that she's bringing up liability, right? Because the number one claim is liability. It's not property damage. I want everyone to know that. In Broward, Palm Beach, and Dade County, the average fire department responds in 4 minutes. Okay. So the odds of a total loss on fire are very slim. And then, so liability. So the safest thing that you should always do is call Kelly Grant.
Jerry, sorry to interrupt again, but give one or two quick examples of liability. Would that be a trip and fall by a tenant in the property, for example? What are you seeing with liability? Yeah.
Trip and fall, slip in the bathtub, right? Especially tenants that, it's funny, when you go to an evicted tenant who's not paying, oh, I slipped in the bathtub.
Non-paying tenants that we see that from, absolutely.
Exactly. Right. It's very common, especially in the C and D class apartments, right? Assault and battery, domestic violence. There are security laws in Florida, as Kelly Grant can tell you and advise you. It's your responsibility to keep your tenants safe, including lighting, parking lots, all of it, right? And they come at you and the judges pay and the insurance companies pay out on liability. So the safest, and it's your number one claim, number one protection. I have liability on everything. I have no wind on 70% of my stuff. Surprise. And I'm an insurance agent. I'd rather buy a new roof and hurricane windows. But the stuff on the beach with big trees near me, first thing I do is clear the trees around my buildings, roofs, windows, no hurricane insurance. Stuff on the beach, trees, always hurricane insurance. And my lender, I pick lenders that will allow me to waive insurance, hurricane liability. So number one, call Duran, get an LLC per property. It's the cheapest insurance policy you'll ever have. Ask him, it's a couple $100 every year. That's it, because you can only lose one property in a liability lawsuit or a wrongful death, right? So liability has increased due to the frauds and the claims. But to give you a simple thing, if you own a multifamily, 10 units or something, I can get you anything between $140 to $180 a door. If you want higher coverages like assault and battery, sublimits of $250,000, and firearms, you will pay $250 to $275 a door. Personally, me, I take assault and battery, domestic violence, fighting. I do not take firearms. It's too expensive, right? But I have another trick. My management company has professional liability that carries firearms, so my management company is covered. So there's little ways to do loss mitigation. So I would create a master policy when it comes to the liability, right? And then an umbrella. So it's easy to have. Commercial policies are $1 million, $2 million standard. If it's a single family rental house, a fourplex, a condo, doesn't matter. Personal lines, DP3s, as you're mentioning, is only $300,000 in liability. I keep that $1 million on each one, and then I do an umbrella for 5 over. It's less expensive that way, and it covers the entire spectrum. And there is about a 20% increase over the last 24 months, right? But it's not like the wind and side. So don't worry. And my suggestion is don't make claims. I can't insure you unless you really have to, right? Liability insurance is legal defense. That's what it pays for. It pays people to defend you. But if you have an open claim with a slip and fall, you're going to get non-renewed, and no one will take you, right? Or you'll pay double the price. So be very, very careful on claims. And sometimes it's better to get a lawyer, right? Like Kelly Grant, to defend you over a small, frivolous $5,000 to $8,000 slip and fall and make a quick settlement than it is to make a claim, right? So be wary on claims because you're in this business for ROI. Next question.
You know what, Jerry, let's save these for
Yeah.
the end because we've got about 15 minutes here for the content of the presentation. I don't want to go too far over, and then we can stay
Okay.
another 10 or 15 minutes after and answer all the other remaining questions. So,
Right.
perfect.
I'll
Yep.
address her question in a story.
Sure.
So, okay, other agents. My warning is to you now. Do not wait for your renewals. All right. Everybody that I compete with, USI, Brown and Brown, they are holding your renewals. Either you're getting a non-renewal, this is especially in commercial, right? And in residential. Residential, they're still sending them because they, 30 days in advance and stuff like that. In the commercial world, they are holding your renewals. Number one, because they're scared, right? Your policy last year was 22,000. Now it's 100,000. It's that shocking, right? And they're waiting till 3 days before, and then they send you the renewal. Why? Because they get 12 to 14% commission. USI, Brown and Brown, all the big agencies that I compete with, they won't touch the solutions. And the solutions are the government. And the government is citizens. And you are a taxpayer. And that's why they have been created. Okay? They are governed by the legislation, laws. They had an 8% rate increase last year. They are here for you for this reason. But it's like dealing with immigration or the Department of Motor Vehicles. I got to go through a 30-point inspection process of this. I have to have new roofs, this. But guess what? Your insurance will be less than last year in most cases, right? But in the free market, Citizens only pays me 7%, and they have limitations on what they have. But that I have assembled an inspection team for commercial, an in-house appraisal that they need certified, all of these things. And every client that I have on the commercial side who's working with these big companies, they get 100 to 300, and then they call me 3 days before. Sorry, I cannot help you get to Citizens unless you're waiting to lapse coverage for 30 days. That's the process to get into them. So in my experience, the law of the universe, which is greed, is what's happening out there. And I just came back from an insurance convention, and they're like, you're bringing in $1 million premium every 2 weeks in new business? Yeah, with who? Citizens. Oh, you don't get paid? You don't get paid. Really? I just saved everybody's butt, right? Who owns commercial real estate, including my own. So that's what's going on. And they're short-sighted. In 36 months, we're going to go back to the free market, and all those people are my clients because they remember what we did for them today, because I may not be getting paid as much today. Big deal, right?
I can testify to that too, for those listening. I had one of my multifamily properties, a sixplex. My insurance went from 9,000 to 18,000, and Jerry's been able to get me into Citizens, get me back to right around $9,000. So essentially where I was last year, which to me is an incredible savings really in this market. So, Jerry's right. Citizens is the way to go, but with so many, there's so many loopholes and there's a lot more work, but Jerry's willing to put that work in. So, and I can testify to that, but yeah.
Yeah. And listen, my biggest problem is staff, right? And Duran knows, right? Because to underwrite with Citizens, even a fourplex or an eightplex, right? Or those, it's a massive experience. And I'm dealing with like the Department of Motor Vehicles, and I'm their feedback. So I work with their board of governors. They ask me how much more capacity I need. They're asking me for feedback in their systems. And then a bad day, a desk adjuster has a bad day, doesn't like the picture of a roof of a commercial building or your house, and they deny it, overturning an engineering report. I deal with that all day long. It's 3x the work. And I get paid 7%, not 14% commission. But it doesn't matter because we're doing the right thing by everybody, and you're taxpayers, and so am I, and that's why it exists. He owned that sixplex, not because, he's say he paid $1 million for that. He invested $200,000. He's making 12 to 14% cash on cash. That just killed it for him. So his agent doesn't care. There's solutions out there, but they pay less. So long story short, let's roll. This will answer that woman's question. I had a call. Listen to this. This is the crisis, real story. I had a call from Danny Catan, which we know him. He's a big syndicator. He referred me a woman who's a single family residence portfolio, right? 137 homes outside of Tampa, Volusia, Hillsborough County, that area. Average homes are 1950s, 60s, 70s, 80s, 90s, 800 to 1,200 square feet. They're all rented. It's a SFR portfolio, right? Last year, and remember, none of these are new construction. They all rent between 800 and 1,200 a month, affordable, workforce housing, and it's spread out. Last year, she was under one master policy, as this woman is asking, right? Which we call a DP3 if you only have one. That's what she was asking about. So dwelling policy. So it was a $22 million total insurance value. So if you add up all the houses, her replacement cost was 22 million, not market value. Market value is probably double, right? And she had $22 million in value. She had $20 million in wind coverage, 5% deductible, 20 million in hazard insurance at 2,500. So she was a little underinsured replacement. That's okay as long as you maintain 80%. And that's a trick to getting lower premiums. And her premium was $120,000. She called me when she got a renewal 4 days before with Zurich, master policy. $28 million replacement value. Why? Inflation. Construction costs are up 30%. There you go, right there. That's the triple knockout, right? $28 million in wind insurance, right? But only, which is required, only offering $5 million in wind with a 15% deductible of the $28 million. Do the math on a deductible. $3 million, whatever, over. $10,000, $10 million in hazard insurance with a 25,000 AOP, all other perils, fire, vandalism, deductible. Some of these houses are only insured for 80,000, 120. Some are wood frame, some are concrete, some are not. So, and the premium was $320,000. Do you think the bank's going to accept this? Number one, would you buy $5 million in wind insurance at a 15% deductible off a $28 million? That's where the price is set at. They have no capacity. So you know what we did? And no one takes on this project. We wrote 137 DP3s in Citizens. The entire deal, it was a nightmare. We dispatched 10 inspectors, and out of the 137, she had 101 good houses that we could submit to with Citizens with clean 4 points. She became part of our team. She's an institutional investor. She uploaded reports, made sure they were signed, did drop boxes, clean reports, bad reports. We got 97 of them into Citizens. She lapsed by a couple of days, right? But the entire quote with Citizens, with real coverage, 2% deductibles, including general liability, was $185,000. And the total replacement cost value, the TIV, total insured value, was $31 million because Citizens won't take anything. Yep. They won't take anything under 140 a
So
foot.
higher TIV replacement cost, but the premium was what, maybe 60% of what Zurich was quoting them. Yeah, it's amazing.
And by the way, when you have DP3s, it includes income loss, right? Which are bank required on a commercial loan, non-recourse. So no one could believe it. No one could believe that we did it. We assembled a 4-person team and she worked hand in hand with us. And by the way, she is replacing 26 roofs just to get insurance right now. But these are 900 square foot houses. So all the deferred maintenance is getting knocked out right now. And now she tells me she owns 410 houses in Jacksonville County because it's a huge county that's coming up in November. But what else was I going to do? She can't take that other policy. The bank won't even accept it. And there goes her ROI. It's $200,000 difference for nothing. That's what's going on. Why? Because Zurich forgot to send a non-renewal to her. 45 days in advance is the law. And if you don't send a non-renewal because you think there may be capacity towards renewal, that's what you send. And that agent held it till 7 days before. That's a good payday. 14% of 320,000. So be wary. Okay. So solutions. You've heard them throughout my presentation. I found a credit union local, Broward County, that wanted to get into commercial lending. I approached them in November. Duran knows them. I said, if you waive wind and you waive business income and you be flexible with your rates on properties that are this year built 3 miles from the coast all over Florida, I will get you so many loans. I've referred them over $120 million in lending because they're flexible. They're a portfolio lending, nonprofit, and they can judge real risk. not a piece of paper that says these are the bank requirements because I'm borrowing from the Fed. So that's one. I have the banks that will do it. Number two, citizens. I can't stress enough. People say citizens. The government exists. The state of Florida has a $2 billion surplus, right? Citizens, it's a government entity, but what do you think is going to happen? If I show you a chart of insurance capacity in Florida for 40 years, regardless of the cycles that I'm talking about in the interest rates, curve is this. Same in California. We will be, right now, almost 65% of the homes in Florida are insured through Citizens right now. And it's effective. Why? Because they don't have to spend $60 million, like I said in the beginning, on reinsurance. They can float a bond. They can float a bond at 4.5% tax-free that institutions, and that's their cost of funds, not 60 cents on the dollar for insurance, right? With reinsurance. So the government exists for this purpose. And I like our government. I'm not going to get into there, but how do we have a $2 billion surplus? Because it's managed well, right? So we are prepared, right? Look what happened when the storms hit Sanibel Island and everything. So we deployed 2,000 workers in 48 hours. And by the way, Citizens' new rule is flood, right? You must have flood insurance if you're in a zone, if you have Citizens. Why? Because when the storms came through in Fort Myers and Sanibel, all the claims were made to Citizens. It wasn't a windstorm event, folks. It was a flood event. So that's flood insurance. Remember that. I have flood insurance on my coastal stuff, just, even if I pay for it. So what happened is all the claims came against Citizens. They denied them all, and the lawsuits happened. Now you want Citizens, you need flood if you're in a certain zone because they want to avoid lawsuits. They're no idiots, right? And our government, they're here. They created this. It serves the purpose, and it is the solution. And unfortunately, it doesn't pay the agents very well. And unfortunately, it's a nightmare, but it works and it keeps your deal going, saves your cash flow, yada, 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 yada. I spend 30% of my time underwriting with Citizens and training teams, the other 30% negotiating with banks, the other 30% telling people how to fix the problem, even though my agency literally doesn't even have the capacity to do it, because most agents that I'll hire won't do it. They won't do the work. It's 3 times the work, right? What Jerron does and I do when we deal with the government, law, courts, it's a lot of work. And
I don't know any insurance agents I've dealt with that negotiated with banks at all, period. You're the first one. So that sets you apart. So, yeah. So let's jump into some questions here. But before I get into other questions, let me ask one other thing, Jerry. So for those folks here, whether it's for their own personal homes or they're investors who invest in single family homes or townhomes or condos and or agents, we've got some realtors who specialize in residential properties. We've talked a lot about multifamily, commercial, et cetera. But do the same rules apply for residential homes as well? Would you default to Citizens for most policies right now on residential homes?
It depends, right? So like if you have new construction, 2000, year 2000 and newer, there are markets, right? But for example, Universal, Edison, and Florida Penn, they won't write in Boca Raton anymore. Fraud. They just pulled out. That was one of our carriers. And we have a lot of new construction in West Boca, Parkland, right? They won't write. So if you have 2000 plus newer construction, I do have markets, Tower Hill. But again, 4 years ago, it was $5,000 to cover a $600,000 house, right? Replacement cost value, not market value. Today, it's 12,000, 14,000, right? And Citizens is so strict and it's making everybody, but if you have a 1970s home with minimum hurricane protection or not a new roof that's, within 20 years, that has 5 years, you don't have a choice, right? Because the open market will decline you. That's it. They don't want to touch it. There's no capacity. Insurance is different. You have to think like this. The more insurance I sell, right? You would think they would give me better pricing. I'm one of their biggest agents selling them. It's the opposite. I become a massive risk to them. I have too much on the street. I am a risk. Cut Jerry's agency off. No more in that zip code, right? They don't want the risk. They don't want your business. And there's no capacity. So they will cherry pick right now and they will price it high. So I see here, is there a downside to Citizens? If you've got an older home, pre-1970s, there is no other real. Ed Jackson is the CEO of Bass Underwriters. He's a mentor of mine for 14 years, one of my best friends. $600 million insurance wholesaler, fourth largest private company for insurance wholesaler in the country. I have dinner with him all the time. We're sitting with all my friends today. I go, Ed, how's the capacity for 1970s and 80s Joseph Masonry homes in Florida for insurance? He looks at me and he goes, 0. Like, we laugh, but it's like, that's the truth. Unless you're going to pay 3x. So did I answer the question?
So, well, Shirley asked if there was any downside other than, of course, jokingly that they're difficult to deal with. Anything else? Like when there's claims, do they pay out claims?
They actually pay. That's
Okay.
the joke.
So
They're
that's the
not.
upside.
So
Yeah,
that's
one of
the
the
upside.
upsides. Yeah.
Right. I'll give you a quick story. I don't know. You saw that. I have Tower Hill on my house, right? I don't carry wind, but I carry water damage. Because, by the way, all the private carriers and the E&S carriers, all of them, take a look at your policies. The number one exclusion is water damage. You used to get full coverage. If your house was valued at 600,000, you get 600,000. Now it's 10,000 on water and sewer backup, 10,000 on water. I'm 2007 construction, so I get full water damage, right? And my house is insured for $780,000 replacement cost value. Live on the water at East Fort Lauderdale. So I never make claims. That 1 in 1,000 year storm that just hit with the rain, I have a 3rd-story balcony with an elevator. My balcony took a tree limb and filled with 4 feet of water, broke the seals on my hurricane windows, went right into my elevator shaft. I have $200,000 worth of damage that my crew can fix for $100,000. They denied my claim. Tower Hill, I sell $4 million worth of Tower Hill a year. They're supposedly a great company, right? Tower Hill Exchange, admitted carrier, no taxes. I'm just being honest, right? They see what happened to my house, and I can bring a public adjuster, an attorney, and we can hit them for $500,000. They denied my claim. I overturned it with an engineering report. I called their C-level and I go, can you give me $60,000 to $80,000 and stop denying me? They will do what they have to do to not pay you when they see something like that. Auto insurance is different. That's why Geico, look at it, ask Warren Buffett, they lose money, right? They pay all the time. They have to. It's an industry of litigation, pay, settle quick. In the property insurance world, when they see a claim like that, they'll do everything to not pay. Unfortunately, that's why the people hate us. And I told Tower Hill this. I don't need an adjuster. My crews that renovate, I can do it for 60, 80 grand. I finally overturned it the 3rd time. Citizens pays. They may say, you have an option. Take this money, use your own people, or use our 5 certified crews that they monitor, that they dispatch, and they fix. I had one claim 14 years ago with Citizens on a DP3 duplex that I owned. And I had a theft, vandalism. And they stole the wall unit air conditioner, right? Citizens denied the theft of the wall unit. I read the policy. It said if in coverage A, any equipment that are primary to the use of the house, right, is considered piece of the house. This guy was saying it was a piece of contents that I didn't have coverage. So I overturned him, sent a letter, copied the CFO, Chief Financial Officer of the state that regulates Citizens, right, their office, clipped the policy, and I got a phone call in 2 minutes. Citizens has 5 days to respond to you. Tower Hill, they're dragging me for 3 months. They're regulated, even for us, as making a claims. 5 days to respond. He called me up. How much is the air conditioning? They paid. That easy, right? So they pay. And by the way, if you go ahead.
A couple other questions here. Just want to run through these real quick so people get them answered. For self insurance rental properties, one person, Marie, asked if there's any catastrophic damages insurance available anywhere in the market. And then another person asked for self insurance. If a major storm hit Miami, can I expect aid from FEMA? And do they penalize people who choose not to have insurance?
I mean, listen, you can always go to FEMA. If you think Citizens is bad, try FEMA. Okay. And that's the truth of it. If you don't have insurance, you can I self-insure, right? And I find banks that waive wind. but I self-insure by, like I mentioned, new roofs. You want to spend $8,000 a year on hurricane insurance, or you want to put some new hurricane windows in, right? I, on my portfolio, have saved over $120,000 a year for 10 years with no wind. Now, have I had some damages? Yeah, but I have full-time maintenance people, and I fix it for $18 an hour with my staff, right? $22 an hour. My technical guys get $30 an hour. So that's how I deal with it, right? Because I'm scaled, right? So that's self-insurance, right? Will FEMA bail you out? Good luck, right? There's people who still haven't been paid from the flood in Fort Lauderdale that didn't have flood insurance that filed all those disaster relief things. It's a full-time job to get that if you don't have insurance. So if you want to spend your money filing all that stuff with no insurance, I mean, time is money. Start to, weigh the key performance indicators. How much time are you spending versus paying for a flood policy? So That's how I can answer it. Yeah.
Thank you. Another question. Currently, my residential properties are my personal name with personal loans. How does changing title to LLC affect my loans and insurances? I'll let you answer the insurance question with regard to the loans. Just technically, in a mortgage document, there's an escalation clause, and you're not supposed to be changing title during the course of the mortgage. So if you do that, technically the bank could escalate. I've never seen that happen, but I always make my clients aware of that when they come to me and say, hey, I want to put this property in an LLC to help with risk mitigation. So you can do that, and it's your choice as the client, but I certainly tell people that can be a very, very small risk that could occur. But as long as you're keeping your mortgage payments current, again, I've never seen that occur. But regarding insurance, Jerry.
Same answer. So I do that exactly what he's saying. We all get residential mortgages. Each person can get up to 10, right? Why? Because the rates are better, 30-year amortizations. I do it in my name and everything he just said. Insurance doesn't matter. If you're dealing with Citizens, they'll deal with an LLC, but you're missing liability. If it's an LLC, they won't give you liability, Citizens. So you buy that elsewhere, right? But yes, you can do that. But like I do what he does, right? As long as you pay your mortgage, the bank doesn't know, but technically you're in violation.
Great.
But I do that all the time. Yeah.
Yep. Linda's asking, you mentioned firearms. Can you clarify that? Are you saying if a tenant has any firearm, the owner needs extra liability insurance? How do we as property managers know who has what? Does the tenant have to carry a permit? And how do we supervise this?
Yeah. So when you have tenants, it's called a lesser's risk, right? So so people should be clear. If you have a homeowner's policy, you carry general liability. The standard is 300,000. Citizens offers only 100,000. So you need to bridge it to 200. Otherwise, you can't get an umbrella, because umbrellas, which are $1 million, $2 million, $3 million, they require minimum limits on your home, 300,000, and your cars, 250, 500. 90% of the people that drive around have 10, 20, right? It's crazy. So you need minimum liability limits, right? Citizens, you can bridge it for $60 with a supplemental app on rental properties or this. Homeowners insurance has your liability. Anything that you have in your name, right, is subject to lawsuit, including the cash in your bank, right, that's in your name, all of that. You should have a personal umbrella policy or a homeowner's policy with limits that equal your cash possible loss. You can't lose your house in Florida due to homestead. They can tell you that, but you got to watch that. So homeowners insurance liability protects you everywhere. It follows you and your family everywhere. And people don't understand this. If my son's on the baseball field and throws his bat and hits another child in the face, and there's $1 million in medical bills, that limit pays for that. I had my son get in a fight at school and charged with assault and battery. Forget about it, public school. They were both charged, right? At 14, guess what? They sued us for medical expenses, right? My insurance covered that, even though my son was off, right? It was a fight over a cell phone in a gym locker, right? But some parents do things like that. So it covers you. So that's your critical protection, your homeowner's liability. Those are the lawsuits that come. My wife, we have a golden retriever 6 years ago. We have a 6-year-old, took the golden retriever out of the back seat. She decided to hold it. An older woman was walking a dog across the street. My 6-year-old can't hold a golden retriever. It tripped up the lady, right? Went right at her dog, wrapped her dog up, boom, bam, hit her head. She's my neighbor for years. She went to the hospital. I paid her medical bills. She could have sued me. It happens every single day, little things like that. Now, in the world of property, right? It is because that was negligent. You don't give a 6-year-old a 70-pound golden retriever to hold. That's it, right? But it covers me. So on a rental property, you have lesser's risk. Your liability is there in case your tenants sue you, right? Completely different animal. Check your insurance policies. Agents will write you an HO homeowners policy versus a DP, completely different liability, right? You are not covered. Or let's say you decided to buy another house and rent your current house and never changed your policy. You don't have liability insurance, right? That's a rental house now, but you never wanted to tell the agent because you're afraid the premium's going up. You better get some liability insurance. So there's a clause, you have 90 days to change it, or you take a penalty on the claim. So on a DP or a rental property, that is lesser's risk. It covers you, your tenants suing you or your tenants' buddies and friends. So let's say they're over there having a few drinks in one of your rental apartments, right? 4 or 5 people, and a fight breaks out, right? Well, who owns this house? The landlord. Guess what? This guy's got medical bills, he got punched in the face or whatever. You're getting sued for that. You're the one with the insurance. Now, I'll give you one last story. My client has an 82 unit in Jacksonville, right? Across the street, there's a liquor store that was robbed. The guy with the firearm ran at gunpoint, ran across the parking lot. His tenant, Good Samaritan, tried to stop it. He was shot and killed. Who paid out? The insurance company, because Florida security laws say you have to protect your tenants. That's the law. Google them, right? You'll see. So that paid out $1 million in a wrongful death. His liability last year was $82,000 for the complex. This year he was renewed. I couldn't get it. $400,000 for $250,000. That was the trick that we did. We formed a management company that carried professional liability on a separate LLC because you don't have to. That's a different, and they carried firearms coverage. Firearms coverage is not available based on your zip code. If you ever, a high crime zone, you can't even get it. But most of Florida, you can get it, and you'll pay like I said earlier. If you're paying between $140 and $170, that will include assault and battery, right? Up to $1 million. If you want to pay a little less, just get the $250 for that. But if you want firearms, it's going to $250, $275 if they offer it.
Thank you, Jerry. Mina asked, for the same property, can premiums be different from different agencies?
Yeah, of course. There's so many tricks, right? So if I do a replacement cost estimator on your 1,000 square foot rental property, right? And I put in custom grades, right? And that's what we do. We do replacement cost estimators inside the portals for the carriers for residential. And we do them here with a software called Marshall and Swift, like an appraisal software for the carriers. I can put in custom grade for $300 a foot. I need to insure this property for $300,000, or I can put in builder's grade basic for Micah, $120 a foot, $120,000, right? It's all about your agent and where his motives lies and how savvy they are, how sophisticated, what's their goal, deliver commissions, deliver competitive policy, all of the above, right? I can remove, I can sell you something with no water damage for 20% less, but is that important to you? Right? So there's so many tricks. And by the way, there's something called co-insurance. As long as I maintain 80, it's an inflation clause that's built into the contracts. But as long as I maintain 80% or more of the replacement cost, right? Which let's say it was 200,000 at 80% would be whatever, 20% less, 160. I can insure you for 165. Let's say 18% less than the full replacement cost value. It saves you 18% of your premium, and there's no penalties in a partial claim for underinsuring. There's little tricks, right? And just like you're looking for a piece of property to invest in or trying to find the best deal, you need somebody on your team who does the same thing with the insurance policy, right? My biggest problem, and if you're out there, is I need sophisticated staff who like to think like me, right? And that understand problem solving, thinking out of the box, and are more concerned about their clients' cash on cash returns, what's out of their pocket. I don't sell price, right? Realtors call me, can I get a cheap policy? They have no idea what they're talking about most of the time. And that's nothing against realtors, right? Because they need to get it through the mortgage to close their deal, to make commission. right? But like, I don't sell price. I look at the scenario, and I work with banks that say, if we don't land a $3,800 insurance policy on this, there is no deal. And the client can't come up with 5% more on the mortgage to offset the new insurance price. So I have to really assess their risk. What are you trying to do? You just want to close, or what do you want? Right. But if you're worth this, and that, you need certain coverages. Right. So my biggest problem is to find people that think like us. And it's hard, and so we don't sell price. We advise clients on solutions based on their needs, whether it's a low price insurance policy because we need to get a mortgage closed, whether it's protection and things like that. Most agencies, they're all about price. And by the way, 3 agents can quote Citizens. One can be $800 and the other 2 could be $1,400 and one can be $1,800. One is doing a bait and switch on you to close the deal. Why? Because as soon as it goes to underwriting, you go to closing, they got it, inspections comes out and you underwrote this wrong. The value's too low. Be careful. Happens every day. We don't do that. I'd rather tell you it's going to be $2,000. And once it gets through underwriting through Citizens, maybe we get a credit back. So I hope I answered your question.
Yeah. Thank you, Jerry. Couple more quick ones and then we'll wrap up here. Suzanne says, is it important to stay away from frame construction and residential real estate? I hear different opinions on this. And then she also says, will Citizens cancel or non-renew a residential policy if a claim is filed?
So Citizens, no. E&S carriers, like, they will. They don't want you. What's funny is statistics show if you get hit by lightning, you're more likely to get hit by lightning. That's what the insurance models show. Interesting, right? You think, oh, I'll never get hit by lightning again. Bam, that's what happens. Chances are you're a golfer, right? So Citizens is one of the only carriers. That's why they say it's the place of last resort, because no one will take you with an open claim or a roof claim. Guess what? Citizens has a legislation, a paragraph that they can, right? You have an open claim, you sign a no loss letter. We're not responsible for this. Here are the prior damages. Here are this. Here's the conditional contracts. Here's this. Yes, it's a nightmare, but you got insurance. So there's certain situations where they can deny you, but not really. Their biggest thing right now is they're sending inspectors out. If you don't have 5 years on your useful roof, life on the use on your roof, 5 years of useful life on the roof, they will cancel you the prior year, or you have to take action on your roof. And it doesn't mean you need a new roof. Most people are in panic. There are ways to do it. If you have flat roofs, you can silicone them, get the inspector out, it gives 5 years. You can re-shingle a roof on top of the old shingles, but they're watching for that. But they are one of the only carriers that will accept open claims, which is the last resort. No one else will, right?
And how about frame construction? Should people stay away from that?
Listen, if you go north of Orlando, frame construction's everywhere, right? So do the carriers love it? No. Citizens accepts it. All carriers will accept it. So if you want cheap insurance, anything pre-2000, stay away from. But that's almost impossible, right? I own property in Sailboat Bend. It's a historic neighborhood, and I own stuff in El Cid in West Palm, right? All wood frame. They're Dade County pine structures that have stood the test of time for 70, 80, 90 years. I insure most of those. I can get you into Citizens with them, no issues. I can get you into E&S carriers with them as long as there are updates and things like that. And by the way, for me, I tend to go into historic neighborhoods because supply and demand. This is my real estate investors speaking to me, right? There's little niche areas, right, with historic homes that there's a certain eclectic crowd that wants that. Limited supply, high demand. So people like, you bought a 1932, 1,200 square foot wood framed house, right? I go, yeah, why? I go, because it rents for 30% more. Because there's a certain crowd that wants it. So I'm not afraid of it. Watch your floods. Before you close on deals, old wood frame with crawl spaces, it's a calculation. If it's on a crawl space and the openings aren't big enough, they measure that so the water can flow. If it can't flow, your flood will be $5,000. Always check your flood before you buy a property. You could be shocked. It's a deal breaker sometimes.
Thank you, Jerry.
Yeah.
Shirley says it sounds like the overall message is to switch to citizens if you have an older home. How do we go about applying, and do they deny certain types of qualities or age of the home? I would say two reasons. One, for sake of time, but also because it sounds like there's going to be some specific circumstances. Shirley, I recommend you reach out to Jerry after this is over. I put in the chat box Jerry's contact information, which is Jerry at premierprotectioninsurance.com, and his phone number 954-467-8738. So reach out to him regarding that. Michelle has a question. Can you talk about insurance for condo associations? Increased rates have caused monthly assessments to skyrocket.
I'm glad somebody's talking about that. So there is only two carriers right now, Great Lakes. This really started in the collapse, right, in Miami when the building fell. That was the first crisis there. I insured 21 units in that building that fell. Why? Because we have clients with rental units. So she's absolutely correct. So to give you an example, there's Great Lakes Reinsurance and American Integrity are the only ones that'll do it. They just tripled the prices on them. All your HOA fees are going through the roof. I'm getting called by I don't deal with condo associations. You want to know why? There's no loyalty. So I don't want to deal with the new president every month. And there are agents out there that they call condo hunters, right? Because you're insuring $120 million worth of replacement cost value on one big condo. The premiums are $400,000. And you used to go to Great Lakes and American Integrity, they'd pay you 12 to 14%. And it's worth the 6-week process to pitch a board, that you have no consensus with. So I don't do that. It's not my world. And the average retention on condos is 24 months. The policies. So they're called condo killers, condo hunters. They're going for the score. But she's absolutely right. It's a crisis. All of them are tripling the rates, same no capacity, same thing that I showed you. So let me tell you something. Citizens has no limits on commercial residential, multifamily condos, right? Citizens limits for commercial non-residential are 2.5 million. Office, warehouse, right? Strip malls. Why do you think that is? No limit. Because they're the only ones that are going to insure the condos on the beach. That's why. So they will insure 120, 140, 150 million, 180. And now you have to meet the new requirements to bring everything up to beach. So there are certain condos are getting renewals. If you have a 2020 brand new condo that was built, no issues. I'll get you a Lloyd's syndicate. Why? It'll be fairly priced, reasonable. Why? Because Lloyd's isn't stupid. They know that the odds of you getting that building destroyed are 0.0001. But now you give me a 1970s condo in Miami Beach. No, thank you. With 40-year inspections, industrial problems, non-hurricane codes, in Pompano, right? And West Palm, those are the ones. So be careful, investors, when you're buying those condos. The crisis started last November. The last good renewals were about September, right? And then the market fell out of bed between interest rates and capacity and the storms. This next 12 months, right, is when everyone's going to feel the pain really bad. And that's what's going on. And there are so many people in condo. I got a call, last story, from downtown Fort Lauderdale. It's called the Andrews Legal Center, right? It's condominium offices, right? Mostly attorneys, right? My buddy's over there. He's on the board. It's a $65 million concrete building that went condo offices, right? Last year, their insurance was $260,000. This year was $720, right? They non-renewed. Can you imagine being on the president of the board of the condo association and taking the risk to say we're not renewing our insurance, $720,000? He only renewed the general liability and the directors and officers coverage, so he doesn't get sued. But what situation is that guy? And he's doing this out, he's doing it as a volunteer position, right? And what do? We got him $2.5 million with a citizen's wind. We got him a hazard insurance policy, which I can get priced well because it's a concrete building. And we saved the day. And we landed the whole thing at under 280 because we don't have the full wind limits. But guess what? Those are all attorneys who own condos in that building. It's an all attorney building, all condos. They're not going to pay an assessment. Last year, your HOA fee was $1,200, and now it's $3,600. And remember what my philosophy is. most insurance companies don't want to pay. So I keep that in the back of my head a lot. So
Two more quick questions. What is a formula that for insurance companies are using to determine the value of the property, building minus land?
yeah, so depending on construction type, there is no real formula. You have to run something called the Marshall and Swift replacement cost indicator, but I can ballpark you, right? Citizens on wood frame will accept between $90 and $110 a square foot on builder's grade, basic for mica, tile, paint. Custom, the top end, the max they will take is $300 a square foot, 320, something like that. So there's your thing. Average joisted masonry, like these, what we call masonry buildings, concrete cinder block with wood trusses in the roof pitch. We call it J&M, joist and masonry. I can get an average home insured between 135 to 165, right? With certain carriers, if it's more high end, they want 220. Now, here's the problem. Realistically, to build a new home, we buy investment property, right? We try to build it. I can't build J&M low income housing type of situations for under $200 a foot. It's impossible, right? But the insurance companies are not adjusting. They don't have the capacity. They don't want to insure your stuff at $200 a foot. They'll take the 135. So will Citizens, right? Or on a high end home, I got clients who bring in $2 million door from Bali, right? In a 15 million, not 2 million, but a $200,000 door from Bali. Those guys, Chubb, Ace, private client, they're out of Florida. No wind for them. Gone. They're done. So they have to go to what we call Orchid and the excess syndicates. They are paying on a 1980s house in Palm Beach, completely renovated, right? On the water or on the barrier island, that's 4,000 square feet. They're only giving it $400 a square foot, right? 1.6 million, even though he's got a $200,000 door, right? And he's paying $60,000 to $70,000 for that policy right now. That's what they're doing. Most of those guys are self-insuring. Most of those people.
Thank you, Jerry. Suzanne, I know you asked one more question here, but if you don't mind, we've got a hard 12:30 cutoff here, which is in 2 minutes. So again, anyone with any further questions, including you, Suzanne, go ahead and reach out to Jerry one more time. His email address is written in there in the chat. You can open that up, but if for any reason you can't see that, it's Jerry, Jerry, at Premier, Premier, protectioninsurance.com. And Jerry's phone number is 954-467-8738. If for any reason you can't get a hold of him or you didn't write that down, you can always email me or reach out to our firm and we'll give that Jerry's contact information to you. Jerry, this was a real content-filled presentation. It was awesome. I learned a lot from my properties and for my clients. This was definitely an hour and a half well spent. And thank you for all the great content. Any final words from you, Jerry?
No, I mean, just listen, what I've learned in my life is 1 out of 10 teachers is good. 1 out of 10 CPAs is good. 1 out of 10 insurance agents is good. 1 out of 10 lawyers is good. And I wouldn't be here with Ron and Kelly and Grant. We think alike, right? And we create win-wins for our clients. And like people ask me, Jerry, why are you successful? People ask Ron, why are we successful? Because I'm not greedy. And because I think for clients, just like he does. Ron does more evictions, I think, than anybody in the state of Florida. He's the most reasonable, right? He gets that you buy investment properties to make return on capital. He doesn't charge crazy fees. I don't charge crazy fees because all these agents, for example, right now, I'm bringing in, listen, it's like $1 million in premium almost a month in 2 weeks because of all these other agents who are not thinking about their clients and why they invest in real estate or own properties in South Florida. And they're all laughing at me at my convention, right? That I'm only making 7% and working 3 times as hard. What's going to happen in 36 months? People always ask, Jerry, will there be opportunity in real estate? Will there be opportunity in this? I just listened to Berkshire Hathaway's shareholder meeting. In the words of Charlie Munger, who is Warren Buffett's property, they asked him the same thing, right? He's 99 years old. He goes, Jerry, I mean, he said, Jerry, he said to the audience, there is always opportunity. And it starts from people's greed and people's mistakes. And it happens daily. And that's where there is opportunity. So that's why I'm here. And that's why I'm on this webinar. And hopefully I impacted you. Jerron helped you. And that's really, I can't take a lot of you, right? As clients, he can't either. That's how overwhelmed we are. But the point is now you can watch your back with whoever you're looking for and look for the people that are empathetic and create win-win situations. That's all I want to say.
If you have questions, or if you want Jerry to take a look at your policies, and if he can help you save some money, again, give him a call, send him an email, and he'll give you the straight answer. If he can help you, he will. If he can't, or he can't save you money, then he will let you know that for sure. So again, thanks, Jerry. Thank you, everyone, for attending. And we'll reach out to you with a recording if you need this. And I'll send your contact info to Jerry so he can send you his contact info as well. Thank you.